And as always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday, as my great auntie would say. God rest her soul, my great auntie, my pop's auntie. She would say super Saturday just exactly like that. That's why I say super Saturday. And it is January 4th, 2025. First week of 2025 in the books. All right. And it's YT on YT, yours truly on YouTube. I'm live on IG as well. So they can they can't see what you all are gonna see, but they'll be able to hear what you all are gonna hear. All right. And so this is the weekly trade watch list, the first ever weekly trade watch list of 2025. 2025 is going to be absolutely amazing, especially for the people that have direct access to me as far as trading goes. It's going to be amazing, especially the things that I go over and how I teach and how I instruct, and I'll help you understand how these markets look and how be able to mark up your charts and be able to take a lot of less lessons in your trading journey. It's all going to make sense. You're going to be mind blown on this call if this is your first time seeing me, but as you continue to grow with me, it's all going to make sense. Trust me, because today is going to be a banger. We have not one, not two, not three, not four, but five trades this week in the first week of 2025. Five trades this week that did 10% or more. 10% or more on five trades. And I'm going to go over and explain every last one of them and what was the trading psychology, what was I looking for before the trade, why did I call the trade, and everything from the beginning, the middle, the end, top to bottom, in between. All right. So let me go ahead and log into my broker account because we may find a setup on Bitcoin. We may or may not. Who knows? Only God knows. So, but we do not want to be logged out of the broker account while we're looking at Bitcoin and discussing it because Bitcoin never stops printing candlesticks. All right. It never stops printing candlesticks. Okay. So we got to be ready at all times. All right. So, individual watching me live, you can type in the comments section uh, your name and where you're from. What's up, Jazz? Jazz tapping in. She's also in the family, tapping in on IG. You can type in the comments section. The person who's watching the live stream. I like to shout people out for taking time out of their busy schedule in order to come on the live stream, to be able to tune in to the live stream because you could be doing anything else but watching and listening to me, right? You can be doing anything else. But for the people who have recently joined the chat between last night and early this morning and today, I advise you take some copious notes. It's gonna be mind blown. I hope I pronounced it right. Is Torica or is it okay? Is it Torica or Tarika? Is it A or B? The first or the second one? Columbia, South Carolina in the building. What's up with it? South Carolina Gamecocks. Don Staley. What's up, Jasmine? Miss Rivera. Hola, ¿cómo está, señora? Feliz Año Nuevo. Yeah, I didn't think I knew Spanish, huh? Okay, it's Torica. Okay. All right, bet. Okay, we have three people on the stream, but two people typed in the chat channel. Who's the third person? Who's the third person on the stream? I give you a shout out. Maybe somebody that's in the chat, maybe somebody that's outside the chat on Threads or something like that. Oh, Jazz. Well, here's the deal, Jazz. Just because you sick don't mean we can't press buy and sell on the buttons on the trade. Because things like this happen, we need to be able to learn the skill set, right? We need to be able to learn the skill set because things like this happen, right? This is another one of these reasons why we should be wanting to master the skill set because of stuff like that. Oh, before we get started, let's not even turn this hat backwards. Let's go ahead and toss this one just over here to the side. All right, because we're gonna debut a new one. Sheesh. Debuting a new one. Debuting a new one. Hold up. Okay, you watch Torque, you watching on your phone and watching on TV as well. Okay, that's what's up. That's what's up. I'm on the big screen. What size is the TV, Torque? What size is the TV? I'm on the big screen. I made the big screen, y'all. We made the big screen. What size? We on a 65 inch? Oh, you been scalping XRP? You been scalping Ripple? Okay. That's what's up. Oh, we on a 60 inch. That's what's up. That's love. That's love right there. That is love. All right. So y'all ready? Y'all ready to take notes? Y'all ready to take notes? Y'all ready? Ready to take notes? Jasmine, this is just be a refresher for you. Torka, be brand new to this. Watch them with your boys. Okay. Yeah, that's what's up. Yeah, because your son, you also had your son in the chat as well. Okay, that's what's up. That's what's up. And Kwasi. No, Kwasi. I said that wrong. Kwasi. Where you calling in from, Kwasi? Where you calling in from? I hope y'all have a pen and pad, a tablet, some computer paper. London. Shout out to London. London is in the family and London is on the call. That's what's up. That's what's up. What time is it currently over there in London? Kwasi, what time is it? 3 a.m. Okay, so hold on, wait a minute. So it'll be actually 3:29. Like exact right now is 3:29. I want to get my times right. Okay, cool. So let's see. 10, 11, 12, 1, 2. Okay, so London is 6 hours ahead. Nigeria is 7 hours ahead. So now that I know somebody is in the family from a different country, I have to put when I put out my weekly schedule, I'm going to put in Central Standard Time, Eastern Standard Time, Pacific Standard Time, Mexico time, Nigerian time, and I'm going to put in London time. So that way nobody gets confused at, well, you start doing the math. Well, he said 4:30 a.m. Central Standard Time. What time is that my time? You know what I'm saying? But if I just type it out and you just see it, okay, I'm in London. Okay, this is my time. It'll be this is my time. You know what I'm saying? South Carolina, I know that's on the East Coast. So y'all in Eastern Standard Time zone. I already got that in the chat. All right. So yeah, now I need to I need to notate that right here so I can put before I get started, y'all, because we're about to get started. I'll put London is 6 hours ahead. London is 6 hours ahead. So London time 6 hours ahead. All right, cool, bet. I'm gonna drop some stuff on here that y'all probably not gonna. Some of you gonna probably have to do with the old way, how you think what trading is. Some of you not gonna believe some of the things that I'm saying, and it is what it is. Okay, it's not something I made up, something I came up with. It is what it is. Okay, so here's the deal. Y'all ready to take notes? Y'all ready to take notes? And here's the deal. You can always type in the comment section. You can always because I'll swap back off the charts, and then because I can't see once I share my screen on the charts, I can't see your comments on YouTube. So after a while, I'll come back and look at the comments. Or if I says, hey, anybody have any questions, problems, or concerns about what I went over, and then I'll see your comments in the comment section. That's okay? And yes, I'm a real person. Ain't no fluff. This is a free trading community, free trading signals. I do not generate a dime or a penny from doing this. It's out the kindness of my heart, being a chill forgiver as God wants me to be. And I know there's people out there that wants to absolutely learn the skill set. They truly want to learn the skill set. They want to learn the skill set from themselves, for the legacy, for their family, for generations to come. And I understand the journey that you're on. I understand the journey that you're on. I understand that you want to be the family's generational curse breaker. I understand you want to set your family the generations after you ahead. I understand you want to leave a legacy. So that's my crusade as well. We have identical crusades. What up, JD? You're live on YouTube with it. JD also in the family. So the things that I'm about to open up your eyes to, you are going to be a naked. Number one, you're going to be a naked chart trader. If you've been trading with indicators, you're going to be a naked chart trader. I teach you how to trade with your eyes. It's the things that God has already equipped you with. That's how I teach you, not anything else you need. If that makes sense. You have everything that you need in order to become a great trader. You just need to master what's inside of you, the things that you already have. Okay? It's just a level of understanding. It's just a level of understanding. What up, JD? We live on YouTube. So here we go. Y'all got your pen and paper already? Let's go ahead and get to it. So the first trade, and we're gonna do these trades in order. So the first trade is a 1 to 13 on Bitcoin. Okay, a 1 to 13 on Bitcoin. All right. So this is gold. Okay. First trade is a 1 to 13 on Bitcoin, and I look at the Coinbase version. I look at the Coinbase version of Bitcoin. All right. So first of all, hold up. Turn this backwards because I gotta go in like Ash Ketchum on Pokemon. You know, battle ready. Battle ready. So here's the deal. First trade of 5 of the 1 to 10 plus, right? So here's the deal. This one right here. All right, you see it? 1 to 13. All right. So here's the deal. Number one, before I get into any of that, I have a color code system with my charts. I have a color code system with my charts. Okay. So when you see a certain color, it's on that specific time frame. Does that make sense? You got 9 time frames to choose from: monthly, weekly, daily, 4 hour, 1 hour, 30-minute, 15-minute, 5-minute, 1-minute time frames. Every single time frame has a different color. Does that make sense? So If you've been using the same color for all time frames, do away with that analysis. Okay? You get lost in your own sauce. You get lost in your own analysis. Okay? That's number one. Write that down. Do not use the same color for every single time frame because you're going to forget what time frame you put it on. Okay? Write that down. So if you want to adopt the same exact colors that I have, I'm going to give them to you right now. Okay? The monthly is black. Okay? Anything you see black is on my monthly time frame. The weekly is pink. Okay, and I'm gonna go slow because I'm detecting and I'm feeling that somebody is probably writing this down. Okay, monthly is black, weekly is pink, daily is red. Okay, 4 hour is blue. Okay, 1 hour is green. Okay, 30 minute is gray. M15 is purple. The 5 minute time frame is orange, and the 1 minute time frame is yellow. Okay, y'all got that? Black monthly, pink weekly, red daily, blue 4 hour, green 1 hour, gray 30 minute, purple 15 minute, orange 5 minute, yellow 1 minute. It's just random colors I came up with. Once I see them, I got the template saved. Is on that time frame. I know what time frame I put it on. I don't have to go finding and searching it. Oh, this color is purple. Oh, well, it's on the M15. Just like that. All right. Shout out to the other people that jumped on the live stream. You haven't typed your name in the chat. Please feel free to type your name in the chat and where you're calling in from, where you're actually from. Not because you may be on vacation watching me, but where you actually from. Type in the chat your name and where you're actually from. You may be a part of the free trading community. You may not be part of the free trading community. Okay, you wrote it down. That's what's up, Jazz. That's what's up. Because I sense if you writing this stuff down, you'll be gravitating to learning more. You know, there's a power and a science behind writing stuff down versus typing it. You become more one with the notes. You'll be able to remember more of what you wrote down versus type. Oh, what's up, Eric? Yeah, my bro Eric. What's up with it, bro? Yes, sir. Yes, sir. All right, all right. So here's the deal. Bam, we're gonna do 1 to 13. And yes, Quasi 1 to 13 on Bitcoin, but it gets better. It gets better. Gonna do the trade. These are actual trades I took in order. Okay, Torka. That's what's up. That's what's up. So here's the deal. 1 to 13 on Bitcoin. Okay. This is how it all played out. Let's see. Before I do that, I need to go over this so you all understand why I took the trade. All right. So I gotta draw this out. Let's go on the monthly on Bitcoin. I gotta do this illustration. Okay. I'm gonna type something out. And also I'm pretty sure people are taking notes, like I said, so you're gonna write it down. So here's the deal. Let me put it in text. I'm gonna type it. Okay. So here's the deal. Hopefully everybody able to see 18 font. Okay. The question is this. Where can the bears appear in the market? All right. My people on IG, we live on YouTube, the YouTube link in the bio. Where can the bears appear in the market? There's 3 areas, and there's only 3 areas. All right. Number one, distribution. All these words are foreign to you right now, but I promise you at the end of this live stream, they'll make sense. 2, redistribution. And 3, when the market breaks an old high and creates a new one in a uptrend. Okay. Now, where can the bulls appear in the market? I need to do this so y'all be able to understand why I took these trades. Number one, accumulation. 2, reaccumulation. 3, when the market breaks an old low and creates a new, let me put high right here. Okay, market breaks an old low and creates a new low in a downtrend. Yeah, in a downtrend. When the market breaks an old low and creates a new low in a downtrend. Cool. Everybody able to see what I typed in font? I mean, what I typed in 18 font. Everybody able to see that, or is it too small? Do I need to blow it up? Do I need to make the font larger? I know it's probably zoom. The way I have it now is probably zoomed out where you can't see it, but everybody able to say, everybody able to see it in 18, or they need larger? It's cool. Okay, I got 2 people saying it's cool. Now, who's not familiar with the terms that I typed? Accumulation, reaccumulation, distribution, and redistribution. Who's never heard of those terms? Who's never heard of those terms? Okay, Jazz. Appreciate it. Okay, Kwasi, you heard of them but never used them? Okay. Well, you're going to use them now. Torque, you have it. Okay, it's all good. Actually, the fact that you don't have anything to unlearn is best, because it'll be harder if you're stuck in your ways to unlearn something and to relearn it. But I promise you, when I go over this, you will never look at trading another way. You'll never look at trading another way. So, has anybody ever heard the Wyckoff method? I know Jazz, you've been trading with me. You heard of it. Has anybody else ever heard of the Wyckoff method? Okay. Okay. That's what this is. This is the Wyckoff method. Okay. So this is how and you can write this down. The market prints in this order, and it doesn't print in any other order. Okay. First of all, write down. You can write. First of all, okay. The market prints in market price cycles. The market prints in market price cycles, you know how you're washing clothes and the clothes go through wash cycles? It goes through, okay, the water pours in for so many minutes. Then what happens next? Then the washer starts churning, right? It starts churning. Then it goes what? It'll drain the water. Then it'll go into a what? Spin cycle. It goes into a different cycle. Washing clothes through a washing machine, the washing machine goes through what? Different cycles, and it doesn't skip any cycles. Does that make sense? Same thing with the market. The market has 4 market price cycles that it prints, and it doesn't print the cycles out of order. Write that down. The market cannot skip market price cycles, and it prints in this same exact order every single time. Jasmine is a testimony. She's seen me do it. She's been on several sessions with me to the point where I traded in front of her face. And I think, was it last week, Jazz, that we took a trade on gold? And it was New Year's. Was it New Year's Eve? Not New Year's Eve. Christmas Eve. It was Christmas Eve. We took a trade on gold and we hit a 1 to 10 on gold. Now, Jazz told me her stop loss was too close for comfort. So she took partials at TP1, but the market pulled back to the point where it took her the remaining volume out at break even. So she walked away with something better than nothing. Okay. But my trade hit a 1 to 10 on gold. She took the same exact position with me, called it out live on the Zoom call. It's recorded. By the way, this is how this family would be ran. I put out a weekly schedule where you see I'll be trading live. Okay. I put out a weekly schedule. Okay. You're able to take trades live with me, be able to ask questions with me, live recorded Zoom sessions Monday through Friday, at least 1 hour minimum. Okay. Sometimes we do 2 hours. Ask Jazz. Jazz is on the YouTube live with everybody else. She's experienced. Sometimes we do 2 hours just because we vibing so well. And so we learning so much. And then once the Zoom call is finished converting, I place it in the chat. I'll place it and pin it to the top of the chat. Everybody can pause, fast forward, and rewind it. People who were on the session and people who just couldn't able to come live, who were unable to come live. All right. That's what y'all get. That's what everyone gets. But here's the deal. The people, when I'm live on a session, the people who are on the session are the only ones that get the live trading signals. Other than that, once I'm off the session, then I will post in the chat, hey, possible sell on this. Hey, possible buy on that. But the ones that broke bread and made sacrifices to come on a session with me, ask questions, the focus is going to them. And then I'll show you the result of the trade that we took on the live session. I'll show everybody in chat the result we took. But when we on live, with Zoom, the people who on live with me get the same exact trade I get. If they decide to take it or not, that's on them. All right? That's fair. That's fair. All you got to do is show up. All you have to do is show up. That's all you have to do. Some people sometimes don't even are in shock or they're appalled. Man, this thing is free. Yes, it's free. It's free. It's free. I'm gonna tell you this. It's almost 100 people. It's 98 members in the chat and 138 subscribers on YouTube. You think people are just sitting here and I'm not giving out value? Think about it. All right. So y'all have that written down? The text that's in orange? I got that written down before we move on? So, okay, the market prints like this: accumulation, reaccumulation, distribution, redistribution. ARDR. Accumulation, reaccumulation, distribution, redistribution. This is how the market prints. Accumulation, reaccumulation, distribution, redistribution. Everybody got that? Accumulation, reaccumulation, distribution, redistribution. It doesn't matter if it's an uptrend or a downtrend. Accumulation, reaccumulation, distribution, redistribution. Now, Kwasi is free. There's no catch. There's no gimmick. It's all free. Free community, free signals, free access to me, and I go live 5 to 6 times a week on Zoom. Y'all got that? So now I'm going to explain. You have the market price cycles, the 4 market price cycles: accumulation, reaccumulation, distribution, redistribution. Also, write this down as well. Every single time frame acts as its own market. It doesn't matter if it's the same pair. Because just because Bitcoin is overall bullish on the monthly, that does not mean I can't take Bitcoin for sales on a lower time frame. And I absolutely did right here. That doesn't mean that. Does that make sense? Every single time frame acts as its own market because you have a trend with inside of a trend, with inside of a trend, with inside of a trend, and with inside of a trend, with inside of a trend, with inside of a trend. Does that make sense? You have an external trend, which could be what? Bullish, but internally on a lower time frame, the market could be bearish. Does that make sense? So I'm going to also teach you how to identify that. It's something, the market is snitching on itself. Every single candlestick is intentional. I don't care whether it's news induced or not. Every single candlestick is intentional. What we need to do is become better detectives. It's just like watching an episode of Law and Order, and those detectives are attempting to solve a murder or solve a sex crime. That's exactly what it is. We need to become better detectives. Okay, so I'm going to teach you how to do that. Okay, market moves in 4 market price cycles: accumulation, reaccumulation, distribution, redistribution. You all have that, right? Doesn't matter if it's a uptrend or a downtrend. Okay, now here's the deal. Here's the deal. Oh, I got to draw it first. I got to draw this. This is what I got to draw first. Okay, cool. This right here is an uptrend. Correct? That's an uptrend, right? Uptrend is comprised of higher highs and higher lows. Okay? So right here, this will be a low. Okay? Right here, this would be a high. This right here will be a higher low. And then this would be a what? A higher high. Make sense? Everybody cool with that? That's what an uptrend is comprised of. Higher highs and higher lows. Synonymous with the word bullish, synonymous with the word uptrend, synonymous with the word going long, synonymous with the word I'm looking for buys. All of these words are associated with the market going up. Okay. Now, here's the deal. This was going to blow your mind. I'm going to show you also how to map up market structure. Okay. I'm going to use a scenario that everybody can relate to. All right. Now, here's the deal. The market does this. This is a low. Make it a different color. This is a low. This is a high. Low, high. Now watch this. Check this out. This right here is an accumulation. This low right here is an accumulation. Now here's the deal. Say you are the shoe plug, right? Say you are the shoe plug. Same thing as calls. If you trade in binary options, it'll be calls and sales will be puts. Same thing. All right. So here's the deal. Say you are the shoe plug. You're the shoe plug, right? And you said, you know what? I'm gonna go find some Jordans for the low. I'm gonna go find some J's for the low. I'm gonna go look at Walmart. I'm gonna go look at Payless. I'm gonna go look in Shoe Source for the J's. And these are the real deal Holyfield J's that you found. So you being the shoe plug, oh man, these are at these stores. You got these J's at Walmart on clearance. You got these J's from Payless and Shoe Source. Oh, bet I'm buying them because I know they're gonna be valuable in the next few days, a few weeks, and I can profit from the difference. So what you do is you buy at the accumulation level because it's on discount. It's cheap. It's cheap as hell. Okay. You stocking up your supply. Okay. You loading up on your inventory when the market is at a low. Okay. When the market is at the accumulation level, then the market does what? After the accumulation level, the value of the Jordans that you just bought, the value of them go up a little bit, right? So here's the deal. This right here is going to be a reaccumulation. A reaccumulation is going to be some type of bullish triangle or channel. Okay? It's going to be some type of bullish triangle or channel. Does that make sense? It's going to be some type of bullish triangle, some type of funky looking bullish triangle or channel. Okay? That's what the reaccumulation is going to look like. Okay? And when the market's done reaccumulating, it's going to expand again. Okay? So now, the Jordans that you bought at the accumulation low and at the reaccumulation, the value of them and the price of them have went up. Now they're at a premium. This is the area where you the shoe plug, are no longer going to sell. You bought the Jordans for 100 at the accumulation and at the reaccumulation store, at the accumulation and reaccumulation level. Now that them Jordans that you bought for the low are at a premium, you're going to do what? You bought them for 100, you're going to sell them for 300, and you're going to pocket 200. Does that make sense? Absolutely. See, Torka, I got to draw it out first, then I can show it in the market. Once you understand the drawing, then I can show it in the market. I can't show it in the market unless you understand it first. Does that make sense? That's like putting the wagon before the horse and telling the wagon to say, go ahead, telling the wagon to pull the horse. That's why I'm going over an illustration first. Then we're going to transition and show it in the candlesticks. That's why I can't just explain my Bitcoin trades, or I can't explain all the 10% or more trades because you don't understand how I got into the trade. Does that make sense? I have to make sure you understand this, make the transition, then you understand how I got into the trades once I explain the trades. That's cool. All right. So now at that high right here, you're at a premium. This is the distribution level. Okay. You, being the shoe plug, are now going to do what? Sell your Jordans for a higher price than what you bought them for, so you could profit from the difference. Does that make sense? At the high, you're going to sell the Jordans that you bought at the accumulation and reaccumulation level. You're going to sell them for a higher price that you bought them for, and you're going to profit from the difference. So that's why I said you bought them for 100, you sold them for 300, and you pocketed 200. Does that make sense? Everybody following me? We live on YouTube. My people on IG. YouTube link in the bio. Y'all got that? Market's at a distribution level. You selling what you bought at the accumulation and reaccumulation level. Okay? So now here's the deal. This is a distribution. This right here is going to be a redistribution. It's going to be some type of bearish channel or triangle that's going to do what? Go down. Okay? Now here's the deal. Right here at these two levels, the value of the Jordans that you bought are now losing value in the distribution and redistribution level. They're losing value, so you're selling them fast so you can profit from the difference. Before, what's the next market price cycle after a redistribution? What is the next printed market price cycle after a redistribution? See who's paying attention. The market prints in 4 market price cycles, and they do not print the market price cycles out of order. What is the next market price cycle after a redistribution? Shout out to all 14 people being on live stream. That's love. I'll make sure everybody understands this trading stuff. 2025, you're going to see more traders being popped, more people loving Forex, more people trading because they're getting value from this channel. They're getting value from the free trading community and free trading signals. And I make sure that everybody understands. That's all quick. Absolutely, Torka. Accumulation. Accumulation. So at this level, you're ready to do what? Restock your inventory. Restock your inventory at the accumulation level. So guess what? Accumulation. What's after accumulation? What's the next market price cycle after accumulation? What's the next market price cycle after accumulation? All right, Eric. Appreciate you, bro. There you go, Torka. Reaccumulation, right? So now the market's going to do what? Reaccumulate. All right. So guess what? Accumulation, reaccumulation leads to a what? Leads to a what? Accumulation, reaccumulation breaks the old high and creates a new one. No, it does lead to next cycle, but that's not what I was looking for, Torka. So accumulation, reaccumulation breaks the old high and creates a new one. So accumulation, reaccumulation causes a bullish break of structure. Does that make sense? You see it right here? The accumulation, reaccumulation causes the old high to be broken to form a new high. Here's the deal. The cause is the accumulation and reaccumulation. The effect is the effect, and the result and the outcome is that an old high was broken and a new high was formed. So this is a bullish break of structure. Does that make sense? Accumulation, reaccumulation causes a bullish break of structure. See, Torka, I told you I had to see. You start understanding. I got to draw it out first before we go to the charts. I got to draw it out first before we go to the charts, so it makes sense. All right. So now here's the deal. I'm about to throw something at you. What if the market decides to do this? So here's the deal. Before we do all of that, watch this. Remember, we said we had 3 questions. I mean, we had 2 questions. We had a question that said, where can the bulls appear in the market? And where can the bears appear in the market, right? Y'all remember we had those 2 questions? I mean, yeah, y'all remember we had those 2 questions? Where can the bulls appear in the market and where can the bears appear in the market? And there are 3 areas for each, for the bulls and the bears. So here's the deal. I'm about to show you. Okay? The bulls can appear at a what? Reaccumulation level. So you can see how this accumulation, the market went bullish off of this what? Reaccumulation level. Does that make sense? You can see how this higher low came off of the what? Reaccumulation. Ball every day 30. You understand? You knew? What's up? You want to learn? What's your name, by the way? I don't want to call you by your tag. But everybody got that? Because we said the bulls could come in off the accumulation. The bulls could come in off of reaccumulation, right? So the way I have this drawn up, you can see the higher low came off of a what? Reaccumulation, which is this what? This bullish triangle. Does that make sense? Torque, everybody, y'all following me? Y'all got it? Make sense? Cool. I'm assuming everybody else okay with it too. Okay? So here's the deal. Here's the deal. Okay. Okay, Raheem. So here's the deal. We said the bulls can come in off of accumulation. We said the bulls can come in off of reaccumulation. And we also said, hey, once I turn this upside down, we said, hey, in a downtrend, when an old low is broken and a new low has been formed, the buyers have to do what? Come back in the market. Does that make sense? Let me draw this like this. Hold up. All right, does that make sense? When the old low, I just turned, all I did was flip the chart upside down, okay? Don't get it confused. All I did was flip the chart upside down so I could turn to a downtrend. So we're talking about the bulls right now. We said the bulls could come in off of a what? Accumulation area, which is right here, right? We said the bulls could come in off of a reaccumulation area, which this is a bullish triangle. So that higher low came in off of this reaccumulation, right? And so we also said in a downtrend, when an old low is broken and a new low is formed, the bulls have to come in. Y'all got it? for the bulls. Okay. Now here's the deal. What you see, I just drew this green arrow from here, from this higher high, back down here to this low, right? My question is this: what two market price cycles caused the market to go from this high to this low? What two market price cycles printed? Absolutely. Absolutely. So, what two market price cycles made the market go from that higher high all the way back down to that low? What two market price cycles? And tell them to me in order. What two market price cycles had to print in order for the market to go from that higher high down back to that low? Back to that accumulation low. What two market price cycles had to print? Think about it. What two market price cycles had to print in order for the market to go from that higher high back down to that low? There you go, Torica. Good job. Great job for your first day being on the session. Great job. She has not been in a class yet. She has not been on a live Zoom session yet. This is her first time being on the YouTube live. And it's making sense. It's making sense, isn't it, Torica? No, Kwasi, that's not it. My question was, what caused the market to go from that high back down to that first accumulation low? What caused the market to go from here back down to here? What two market price cycles had to print in order for the market to go from here back down to here? And Torka said it correctly. It's a distribution and redistribution. So guess what? The market created a distribution right here. Then the market did what? Redistributed right here and went back down what? To this level. Now I'm going to tell you what just happened. Okay? I'm going to tell you what just happened. This higher low right here, if the market did this, now here's the deal. This higher low that we have listed right here, this was an area of interest where the buyers had an opportunity to come back into the market because it was an accumulation, right? It was an accumulation, reaccumulation that broke this old high that led to a new one, right? This is absolutely 100% an area of interest where the buyers could have came back in the market. But here's the deal. Me personally, I don't place pending orders. You might as well be guessing that the buyer is going to come in right there. So what happened was this, because the buyers didn't come in right here, everybody that had a pending order sitting right here got liquidated. Because they did this. We're going to put our buy entry right here on the zone, stop loss right below the low, and we don't have any evidence to say that the buyers are going to be guilty of coming in off of that demand zone. We have no evidence. We're just going to sit there and put a buy limit and just guess. That's what we're going to do. We're just going to put a buy limit right there and guess. Negative. Don't do it anymore. You have no evidence that says that the buyers are going to come in right there. This is going to help you prevent a lot of stop losses from being hit. Just taking that into consideration. Because you're not guessing anymore. Orlando only places market executions. All of these trades that I'm going to show you, these 5 trades that I'm going to show you, 10% or more, all market executions. I don't place pending orders. Might as well be the trap and the liquidity for the market. You asking your money to get taken. I'm going to tell you this. How often are you successful on pending orders? How often is anyone successful on pending orders? The percentage is low. So just do away with it. You're not guessing anymore. What you want to do is take a horizontal ray like this. If you're looking for a zone, take a horizontal ray, right click on it, and then place an alert and say, hey, daily demand zone, whatever time frame it's on, 5-minute demand zone. Once price comes down there and hits that area, boom, it'll alert you and send you an email, send you a notification saying, hey, price has hit your demand zone. Come to the charts. Okay, cool. Come to the charts. Let me see if I'm seeing my setup. If it doesn't, it's going to blow through. You just saved yourself. Right? A lot of headache, a lot of stress. Absolutely, Jazz. Very rare that pending orders play out. It's a trap. So here's the deal. Don't do them anymore, especially if you trade with me. I don't do pending orders. Jazz knows. All right. So here's the deal. Check this out. Now that the market has broke through here, now here's the deal. Let me draw this trend line. Okay. Now we know that in an uptrend, right, the market is creating higher highs and higher lows, right? Higher highs and higher lows. So the very first low, the very first higher low in an uptrend that is broken is called what? What is in an uptrend, the market's creating higher highs and higher lows. The very first higher low that's broken is called what? I'm going to see if anybody knows before I say it. The very first higher low in an uptrend that is violated and broken is called what? Yeah, it's a liquidity sweep, but what is it called? I agree with you, Jericho. Jericho, are you in Jericho, you in the trading community and the trading signals chat? It's a liquidity sweep. I agree with you. That's not wrong. But I'm looking for a different answer. Barbie, are you in? Oh, JV. Okay, cool, JV. All right, bet. Barbie, are you in the trading community and trading signals chat? So that's not what I'm looking for. No, it's not a break of structure. It's not a change of trend. I appreciate y'all for tapping in, though. There's not a change of trend. It's a change of something, but it's not a change of trend. There you go, Chrissy. Chrissy, okay. Let me see. How do you join? So here's the deal. In the description on the video below on the stream, first of all, download Telegram on the from your Google Play Store, App Store. Have Telegram downloaded. It's not a change of direction. Chrissy got it. Chrissy, are you in the Telegram? Are you in the free trading community? Anybody not a part of my free trading community and free trading signals that's on the call? I know JV, I know you are. Barbie, you said not yet. So just download Telegram from your Google Play Store, App Store. And in the description below this video, you're going to see two Telegram links. It's going to say trading community and trading signals. You just click on it and add yourself. That is it. Like literally, that's it. Like it's absolutely 100% free. I don't generate a dime or penny for doing this. I'm just helping people understand trading. It's called change of character. A CHOCH, a chach is called change of character. It's a change of character. Does that make sense, Torque? No problem, Barbie. It's a change of character. And see, it's these things that you don't understand in trading. It's these things that you don't understand in trading that I'm going to go over. And when I go over them on the chart, you're going to see them. You're going to be like, wow. Wow. Okay. So here's the deal. Here's the deal. This higher low, which is the first higher low that's broken, it's called a change of character. So I have the template already saved, right? And I advise you, I strongly advise you to save your templates so you don't have to keep typing them up. So I already have it saved. This is called a change of character. Okay? So write this down. Write this down. A change of character does not determine a change of trend. A change of character does not determine a change of trend. But a break of structure shows continuation of a trend. Oh, say, Chrissy. So, Chrissy, download Telegram from your Google Play Store or App Store. And in the description below this video, you're going to find 2 Telegram links that says Trading Community and Trading Signals Chat, and you just add yourself. That is literally it. That's literally it. What I do, I Monday through Friday, I have live recorded Zoom calls, minimum of 1 hour. And sometimes we push it to 2 because we vibing so well and we learning so much. And you all get to trade live with me. I help you understand trading. And then you take the same exact trades as I do and things of that nature. And you'll be able to come on and ask questions and vibe with me. And it's a whole movie. It's a whole movie. We did 5 trades this week. 5 trades this week that did 10% or more. 5. 4 on Bitcoin, 1 on gold. To start the new year off. That's amazing. Oh, by the way, you all don't know the streak that I'm on. You all don't know the streak that I'm on. I'm on a 11th consecutive week. The 11th consecutive week that I have at least. Okay, Torque, I'll repeat it. I'm on the 11th consecutive week that I have at least accomplished one 10% trade. I'm on the 11th consecutive week that I have at least accomplished one 10% trade. All right. So change of character. Change of character is in an uptrend when an uptrend, the first higher low that's broken. In a downtrend, it's going to be the first lower high that's broken. So like this, you see how this would be this is upside down. This would be a high. This would be a low. This would be a lower high. This would be a lower low. This last lower high will be a supply zone. But if the market decides to break through that, it's called a change of character. Does that make sense? Because the market can't downtrend forever and the market can't uptrend forever. So a change of character is in an uptrend, the first higher low that's broken is called the change of character. In a downtrend, the first lower high that's broken is called a change of character in a downtrend. So uptrend, first higher low that's broken, change of character. Downtrend, first lower high that's broken, change of character. Make sense? And when you have this map laid out in front of you, you'll be able to see it. Okay? So here's the deal. Can the market go bullish from where it's currently at? Can the market go bullish from the zone that it's currently sitting in? Yeah, so I'm talking in terms of ratio. So like, hey, my entry, based off my entry and my stop loss, I went 10%. My take profit was 10% from my entry. Does that make sense? My TP, my overall take profit was at least 10% away from my entry. And I'm going to show you here in a bit. We almost finished wrapping up the illustration. I'm going to show you here in a bit on the candlesticks. Yeah, my trades did 10% or more. Y'all gonna think I'm some type of like robot or bot or something like that, or y'all not gonna believe that I actually accomplished these trades, but I did. I did. I got the withdrawal to prove it. All right. So here's the deal. No, not because of the change of character, because the market. Because what do we say? Where do we say the bulls can appear at? The bulls can appear. The bulls can appear at what? The accumulation level, the reaccumulation level, and in a downtrend when the market breaks an old low and creates a new low. Let's see. But before the first higher low or lower low gets broken, there has to be a break of structure within the trend first. So break structure and change. So here's the deal. Right here, you have a low, high, higher low. Market did what? Accumulated, reaccumulated, broke structure, create another high. But the market said, you want to know what? This is an imbalance down here. We need to go pick that imbalance back up. So guess what? The market did a distribution, redistribution to get back down to the level to do what? Refill this imbalance. Then the market decided to do this. So now, what caused the market to go from this low to this high? What two market price cycles? What two market price cycles caused the market to go from that low back to that high? What two market price cycles? Torca. And Torca been on the money. Watch this. Watch this. Watch she get it right. Watch she get it right. What two market price cycles caused the market to go from that low back to the high? Bingo! Didn't I tell you she was gonna get it right? Am I a great teacher or she is a better student? Which one is it? Which one is it? She making me look good. Torca making me look good. Torca has never been on a Zoom session with me. This is her first YouTube live session. We just met today or yesterday. It's her first time ever being on a session with me. So which one is it? Am I a great teacher or is she a better student? Which one is it? Okay, yes, absolutely right, Torca. The market had to do what? Accumulate, reaccumulate to do what? What is this called now? The market went past this high. What is this now called? The market went past that high is now called a what? Watch this. Watch this. What is it called? The market went past that old high and created a new one. What is it called? Bingo! There you go. A break of structure. There you go, Torca. A break of structure. There you go. It is called a break of structure. Now, does everybody get that? You got to map your way to the millions. It's nothing but market price cycles and they print in order. They don't print out of order. They don't print out of order. Watch this. Watch this now. Watch this. Torca. Now that that old high has been broken and a new high has been formed, who has to come into the market? Who has to come into the market? Bingo! It's all making sense. Good job, Torka. It's all making sense. Does it make sense when you able to see the market from up here? Them candlesticks don't mean nothing. They don't mean nothing. The fear is out your body once you understand. Oh my goodness, I'm excited. I'm excited for this market to come back on tomorrow. Man, I'm telling y'all, when y'all understand, when you understand, it's game over. It's game over. The stop losses. Now, the stop losses are part of the game, but you're just going to minimize it. You're going to put a blanket on the stop losses. I'm telling you. Oh, my goodness. I'm so happy for you, Torka. Other people will catch on. So, Chrissy, what did you say? You say, but before the first higher low, okay, or lower low gets broken, there has to be a break of structure within the trend first. So break of structure then change. Yes. So the market broke structure. The market in this particular example that I drew, okay? I just drew an illustration, okay? In this particular example, the market did this: accumulate, reaccumulated, distribution, redistribution, accumulation, reaccumulation, break of structure. The market broke an old high and led to a new one. So that means who has to come into the market now? The bears. Why people are see, I'm gonna tell y'all this. I know y'all heard this before. Breakout traders, break and retest trader, all that is nothing but liquidity traps. They know that you have been trained to trade like that. Why would you be looking for a buy above an old high like this and you already missed it? Your stop loss gonna be way down here below that last low. Why would you be looking for a buy above an old high when you're crossing over into the seller's territory? You missed the buy on the accumulation and reaccumulation level. Does that make sense? Does that make sense? Why would you be looking for buys if the market broke an old high and led to a new one? Why would you you missed the buy entry? Just prepare yourself for the sale. You can literally come to this market and be like this: I'm going to take all sell trades for the week. Well, hell, take all sell trades for the week then. Or you could say, hey, I'm going to take all buy trades for the month. Hell, we'll take all buy settles for the month. You got to understand when the buyers and when the sellers can come into the market. It doesn't matter whether it's pro trend, which is with the trend, or if it's counter trend. It does not matter. You got to know when to buy and when to sell. That makes sense? Torque is making sense up here now, huh? When it makes sense up here, I'm going to tell you, y'all going to be falling in love with trading. Torque's first YouTube weekly trade watch list session, and it's all making sense. Torque, what indicator did I pull up? What indicator did I pull up? It ain't no strategy. It's just what the market prints. It's just market understanding. It ain't nothing that I made up. It's just market understanding. All these damn swiggly ass lines going through candlesticks and Bollinger Bands and this doohickey indicator, this rug pull indicator, and people actually create indicators because they know the average person is not going to want to sit down and learn the actual skill set. Hey man, this indicator shows you when to buy and when to sell. Okay, cool, bet this is the holy grail. Boom, bought you and sell. Naked chart, clean. That's how I like it. Straight naked. So here's the deal. Now, here's the deal. The market did this. Distribution, redistribution, broken old low, led to a new low. Who got to come into the market? The market created a distribution, redistribution, broken old low, led to a new low. Who got to come into the market? Who got to come into the market? The market created a distribution, redistribution, broken old low, led to a new low. There you go, Torka. Bulls. Look at this. Distribution, redistribution, broken old low, led to a new low. Bulls got to come into the market. But you know what breakout traders do? They do this. We gonna sell. Put a sell after the market breaks the low. My guy, my lady, you missed the sell up here. Distribution, redistribution broke the old low. You missed the sell. You missed it. Prepare for the buy now. Does that make sense? Well, when I see people posting charts and stuff like that, I see all these damn squiggly lines and EMAs and all these doohickey. Oh, bro, I'm not like this. It gives me a headache when I see it. For what they don't know. And so, you know what somebody tells me? I really reach out to people. I'll inbox them. I say, hey, what's with the indicator? Or I say, you know how to trade without candlesticks, right? I mean, you know how to trade without the indicator, right? This is what they tell me. Yeah, I can trade without the indicator, but it goes hand in hand with my strategy. What in the hell does that even mean? Either you can trade without the indicator or you can't. Why are you trading with it though? If you telling me you can trade without the indicator, why are you trading with it? That makes no sense. Oh, you know what? Yeah, I'm driving in the rain. I got my windshield wipers off. Can you see? Can you clearly see the road? Yeah, I can see the road, but I just want to keep my windshield wipers off. Bro, it's raining hella hard. Like the condensation is fogging up the windshield. Like I can't even see. Or just the complete opposite. Okay, it's drizzling. It's drizzling. No, here's the deal. Here's a better one. It's drizzling outside. You're driving. You got your windshield wipers on, and then you ask the driver, "Hey, can you see without the windshield wipers being on while you're driving?" "Oh yeah, I can see." "So why you have your windshield wipers on?" I just because I just want to have them on. But you can see the road without them. It's like it's not raining hard. It's just a slight drizzle. It doesn't matter if you put your faith in an indicator. That's how these people sell you these indicators, because they know the average person is not going to want to learn the skill set. They're doing it to find this faith. Oh, let me find this super duper doohickey indicator, and I know they're not going to want to actually learn. I can actually show you a divergence without even using the RSI, without even using the awesome oscillator, without even using the MACD. I can show you a divergence because I understand how a market prints. I don't need the indicator. And then the RSI is the default indicator on TradingView. So when you first log into your TradingView account, there's this purple squiggly line. I didn't modify no numbers or anything, but what I do, I show people, and it's if Jasmine Revere is still on here, somebody that's been trading with me live on the session before, I showed them, hey, this is a divergence before I even double click and pull up the indicator to show them and confirm it to them that it's a divergence. Which showing them that, hey, I'm human. You can develop and have that the eye of a trader. You can have that trader's eye, is what I call it. Has nothing. Yo, when you understand candlesticks, your your understanding is the only confluence that you need. No indicator. Real talk. When I go over these candlesticks, you can be like, "What the hell do I need this indicator for?" I will make you abandon indicators, not because of me. I mean, not because of me talking about the indicator, but because of the way I help you understand what every single candlestick means and stuff like that with these market price cycles. You're gonna be like, "What the hell do I need the indicator for?" That's exactly what you're gonna say. I guarantee it. I guarantee it. It's just not a. It's not a matter of if. It's a matter of when. But you just got to show up. I took all of the trades 10% or more without an indicator. Okay. So now that we understand this, I'm going to go ahead and erase it. Okay. And now we're going to go to the candlesticks. Now we can go to the candlesticks now that we understand. Okay. I had to get this out the way so you were able to understand. And so when I show you in the candlesticks, it'll make sense. Okay. Torque, are you still on? People still on? Now we're about to get into the fun stuff. Now we're about to go over the actual trades I took. All right. I told y'all this session was going to be valuable. Y'all ready? Y'all ready? Y'all stick with me? Okay. Okay, Barbie. Okay. So this is the thing about it too. When you join my Telegram chat channel, I shout you out. I'll tag you in it and shout you out in the Telegram chat channel. Everybody in the Telegram chat channel is going to say, "Hey, welcome, welcome, welcome to the family. Welcome to the family." Because we're family. We just not some ordinary chat. We also do personal self-development in this chat. We also do personal self-development in this family. Okay. The book of the month that we're reading is Trading in the Zone. Not Trading in the Zone. The Disciplined Trader. The Disciplined Trader by Mark Douglas. We do personal self development. Started back up again last year. November. We read Developing the Leader Within You 2.0 by John C. Maxwell. And then backdoored in December, we read Developing the Leaders Around You by John C. Maxwell. You see, and you can see, I know y'all can see back there on that back wall. That's not even some of the books. You see all them books behind me back in that crate, but that's not even some of the books that you can't see. I got books right here on my printer. I got books in my backpack. Oh, I got trading books. It's a trading section back there. And I got more trading books down here on the floorboard beneath my feet. Okay? More trading books to show you how I'm a trading addict to help people understand. All right. So here's the deal. Let's go over the trades. Now here's the deal. We're on the 5 minute time frame, M5 time frame on Bitcoin. Okay. So right here, this is going to be an accumulation. Okay. Now here's the deal. Also, does everybody know what an engulfing candlestick looks like? Does everybody know what an engulfing candlestick looks like? Yes or no? Everybody know what an engulfing candlestick looks like? Yes. Okay. Cool. Large body. Not necessarily. I'm gonna show you. I'm gonna show you. No, not necessarily that. I'm gonna show you what an engulfing candlestick looks like. All right. A bearish engulfing candlestick and a bullish engulfing candlestick. Okay, right here, this right here is a bearish engulfing candlestick. Okay. Why? Because the red body, the body of the candlestick, don't even worry about the wick. the body of the candlestick is larger than the previous bullish candlestick. Does that make sense? That is a bearish engulfing candlestick. Y'all got it? So here's the deal. I don't want you to think of it as a reversal pattern, Christy. I want you to think it as the market price cycle. That is a distribution. And I'm gonna tell you why. I'm gonna show you why. Just because you said that, I'm gonna prove it to you and show you why. I'm gonna show you why. I'm telling you, y'all jaws gonna drop when I say this. Okay. Tell me again the 4 market price cycles in order. Tell me again the 4 market price cycles in order. Tell me again the 4 market price cycles and how the market prints in order. You're going to be mind blown when you see this. You're going to be mind blown when you see this. Oh, also, okay, you have it backwards. How does the market print in order? In order. Those are, Barbie, those are the 4 market price cycles, but put them in order. How does the market print in order? Starting from a low and then going to a high. There you go, Torica. ARDR. Accumulation, reaccumulation, distribution, redistribution. ARDR. 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 Accumulation, reaccumulation, distribution, redistribution. Okay? Check this out. Right here. Watch this. Drop all pins. Watch this. I'm going to prove it to you. Look at this. This right here is a redistribution. Okay? Didn't we say the 3 areas that the sellers can come in at are a distribution, redistribution, and in the uptrend, when the market breaks an old high and creates a new one, the bears also can come in. This right here is a distribution, redistribution. And so guess what? What did the market do? Distribute. This right here is a redistribution. But watch this. What comes out of a redistribution has to be a smaller distribution, redistribution. Does that make sense? Think about a redistribution, right? That bearish triangle. What creates that imbalance for it to go down is a what? Internally, what creates in order for the market to go down is a smaller distribution and redistribution. Does that make sense? I hope I'm not confusing anybody. Think of a bearish triangle, right? In order for the market to go bearish after the triangle, the market internally on a smaller time frame has to create its own distribution and redistribution. Does that make sense? Okay, so here's the deal. This is what I'm talking about. Watch this. So right here, the market distributed, redistribution, came down here, accumulation. You got your engulfing candlestick, right? Y'all see that bullish engulfing candlestick? Right here. This is called a bullish engulfing candlestick. Why? Because the green body is larger than the previous what? Bearish body. Do you see that? An engulfing candlestick is a representation of a completion of a market price cycle. An engulfing candlestick is a representation of completion of a market price cycle. So this right here is an accumulation. What's after the accumulation? Reaccumulation, right in between here. And guess what's next? Because it tapped into this redistribution, which is an area of interest where the sellers can sell from. What was the next market price cycle after you've seen this accumulation and reaccumulation go into this supply zone? What was the next market price cycle? What was going to have to be? What was it going to have to be? So the next market price cycle right here would have been a distribution. So this whole entire candlestick is a distribution candle. So look, you see it? Oh my goodness, look at it. Distribution, redistribution. So then you got an engulfing candlestick. It's a distribution. It has its own redistribution. And then bam, continue down. Now here's the what? Accumulation. Here's your what? Reaccumulation. That's your bullish triangle, right? So guess what? This right here is a what? Area of interest where the bulls can come back in the market. Does that make sense? Y'all see that? Y'all see that 5-minute reaccumulation? This is an area of interest where the bulls can come back in the future and buy off of if they want to. Make sense? Y'all follow me so far? Make sense? Thumbs up, emoji. Y'all good? Before I continue? Oh, also write this down. Also write this down. Okay, so don't think of the market, Barbie. Don't think of the market in support and resistance, because why? People are going to attempt to do what? Be breakout traders. Does that make sense? Think of the market in cycles, just like if you're washing clothes in a washing machine. The washing machine goes through different wash cycles in order to do what? Get the dampness out of the clothes. Support and resistance, you're gonna think of it. They want you to be breakout and retest traders, but they know that you don't understand how market prints. The market prints in market price cycles. What cycle am I in, and at what point of the cycle am I at? Okay, so here's the deal. This is a reaccumulation area. The market accumulated, then the market did what? Reaccumulated and went up. The reaccumulation area is an area of interest where the buyers can come back in the market in the future. So guess what? What's the next market price cycle after a reaccumulation? Before I show you, what's the next market price cycle after a reaccumulation? Yes, it will absolutely be a trap. Pending orders, trap. Support and resistance, trap. Breakout traders, trap. You have the ability to do all these things, but it's nothing but a trap. If you look at the market the way I'm teaching you to look at the market, I guarantee you over a month or 2-month period of time, you're going to see a lot of stop losses being reduced. A lot of stop losses not getting hit. I even teach you how to calculate your stop loss in pips or your lot size. Okay, Torka says break construction and distribution. We'll see what happens. Let's see. Bam. Look at this. After the accumulation, you have your what? Your distribution, which is a divergence and a change of character. Look at this. Literally, this is slanting upward on the candlesticks, and on the RSI is going to be doing the complete opposite. Is going to be doing this, slanting downward. Y'all ready? The RSI is not up yet. The relative strength index indicator is not up yet, but you must understand that, hey, after reaccumulation, okay, I need a distribution, which is a divergence and a change of character. I'm telling you, literally on the RSI, this is slanting upward, and on the on the candlesticks, this is slanting upward, and on the RSI, this is slanting lower like this. Watch this. Y'all ready? Look at it. Look at it. When the price, when the RSI is doing the complete opposite of what the candlesticks are doing, it's a divergence. It is a pivot in the market saying that, hey, the opposite players are about to come back in. Does that make sense? Does anybody on this call know what a divergence and change of character is? Okay, Torka, you heard of it? Okay, cool. Divergences is some of the first things that I learned. A divergence is nothing but a pivot in the market saying, hey, we about to turn a different direction. So say, for instance, you traveling north, and then the street workers or the road workers are doing some construction on the highway, and they say, hey, you can't no longer travel north. We're going to have to divert you this way in order to get around the traffic. That's what the market did. Hey, we were going up. Now we're about to diverge and then go back down. We're about to divert and go back down. Does that make sense? Now here's the deal. Here's an advanced way to look at the market. I'm about to blow your mind with this one. Well, first of all, I didn't say what I was going to say a few minutes ago. A higher low. You said a failed higher high or lower low. It's that exactly, Torque. Reroute it. So here's the deal. The purpose of a higher low, the purpose of a higher low in the market is to break the old high and create a new one. That's its job. That's its primary duty. But we know that it's not always going to be 100% successful. The purpose of a higher low in an uptrend is to break the old high and create the new one. If it doesn't, the sellers will prevent it from happening. Same thing with a lower high. A lower high's job and primary purpose is to break the old low and create a new low. If it doesn't, the buyers will come in and prevent that low from being broken. Okay? Higher low is job supposed to break the old high and create a new one. Lower high is job is supposed to break the old low and create a new one. Okay? But at times, they're not going to be 100% successful, and the opposite player is going to come into the market. All right? So here's the deal. The fact that price diverged, look at all of this in between. Look at the market price cycles. What did the market do? Distribute, redistribute, come to this engulfing candlestick. Okay, cool. Accumulate, reaccumulate, broke this old high, created a new one. Who got to come into the market now? Now that this old high has been broken and a new high has been formed, who got to come into the market? Who got to come into the market? Y'all starting to see the market price cycles now, huh? It's starting to get exciting. It's starting to get exciting now, huh? I told you. It's starting to get exciting. It's starting to get exciting. Y'all see it? Are you able to see it? The Bears, 100% correct. Are you able to see it? Accumulation, reaccumulation, broke the old high, create a new one. Who got to come into the market? The sellers. Distribution, redistribution causes a what? Change of character. So a distribution, redistribution caused a bearish change of character. Who has to come into the market next? You see the market price cycle. I got it already mapped out. Who got to come into the market next? All I'm doing is following market price cycles. Nothing special. Nothing special. Simple. Now that the market has created a bearish change of character, who got to come into the market? The market has created a distribution, redistribution, and caused a bearish change of character. Now who has to come into the market? All I'm doing is following cycles. That's it. I mean, it's what the market prints. It's what the market prints. All you got to do is come to the session and spend time with me, and you'll be able to understand how I do it. We're about to go over the 5 trades. The buyers, 100% Torca. All right, so here's the deal. Didn't we say in the drawing and everything, didn't we say we said this was a reaccumulation level, right? Because this is a bullish triangle, right? So we knew this was an area of interest where the buyers can come back in at. Look what happened. The buyers, they created this low. The market came up high. This supposed to be lower high is supposed to do what? Break this old low and create a new low. But guess what? The buyers stopped it from happening. So now this is a low, high, higher low. The market breaks structure and creates a what? Higher high. Does that make sense? This is a 1 to 13 on Bitcoin. This is the actual market execution. No pending orders. Market execution. Stop loss right below this low, accumulation low. And guess what? We took partials right here. That's why it's dim. This is how you know it's live, because here's the deal. Once the price hits this price number, the clock will go dim, which means the alert has been activated and hit. 50% partials were taken right here. Stop loss was at break even. I don't do a trailing stop loss. I just go break even. And then I let the rest what? Ride all the way to my overall TP. Does that make sense? I trade like this 100% of the time. Once price is TP1, I'm closing at least 50% minimum partials. Excuse me. Stop loss goes to break even. No trailing stop loss. And the rest of the remaining volume is either going to end at my overall TP or it's going to come back to break even. That's how I trade. You have to ETE, eliminate the emotion. How many times have you been in a trade where you was like, I'm up. I'm going to just go ahead and close. Why would you close if your trade is deep in profit? People do the complete opposite when it comes to trading. They will hold a trade in drawdown, but will close a trade that they're deep in profit in. That makes no sense. It makes absolutely no sense to me. You know how much money you leave on the table? You have to eliminate the emotion. Trading is an emotional skill set. So how do you eliminate the emotion? You have a take partial system. Here's the take partial system that I'm going to be teaching you about. Cool. I bought from here. Price hit this level. Bam. I'm closing 50% partials. The rest of my remaining volume stays in the market. So say, for instance, I've out trading with a 0.10. 0.10 hits this price number. Boom. I'm closing 0.05, placing my stop loss at break even, and I'm letting the rest of my remaining volume go to my overall TP. So the market is going to either do one or two things. Give me some more money or take the remaining volume out. That's how you do the 1 to 13. That makes sense? Bam, 13% trade, just like that. That makes sense? Everybody understand how I got in the trade now? And here's the deal. How did I also know? How did I also know that the buyers were going to come in from this reaccumulation level? I'm gonna give you a clue. I'm gonna tell you why. Right here, something I found out that's super advanced. Rub my hands together like Birdman. Here's the deal. Here's another advanced metric that I know happens in the market. You realize that once the market diverges and it changes character, this becomes a supply zone. Okay? This becomes a supply zone. Here's the deal. The market's going to do one or two things after it changes character. After the change of character, the market's going to either do this. After the change of character, the market's going to come back up and do what? Accumulate, reaccumulate, create a lower high, and then do what? Distribute, redistribute, and break down here and create a what? Break a structure. That's one opportunity. The second one is what the market actually did. The market changed character and it kept going. So guess what? This is unmitigated, redistribution, change of character, and it kept going. So now you have an open supply zone imbalance. You got another open supply zone imbalance. If the market wanted to go bearish, the market would have came back and did what? After the change of character, the market would have came back up and created a lower high right here, and then broke structure and created a new low. Remember, a break of structure shows continuation of a trend. A change of character, just exactly what it is. It changed character. A change of character doesn't determine a change of trend. And this right here shows you proof. This right here, this thing changed character, but it didn't change trend. The reason why for this divergence, it was just a retracement to go back and create a higher low. To then for this higher low to do what? Break this structure and create a new high. I'm telling y'all, I know this. I know this stuff. I'm telling y'all. I'm telling you, I cannot wait till the Zoom session on Monday morning. Oh my goodness. I cannot wait. I'm telling y'all, this was the clue how I knew I could have. Now here's the deal. I could have swung my trade above this high. I could have swung my trade above this high, but I didn't. Because for the simple fact that this redistribution is an area of interest where the sellers can come back in at and join the market. That's why I didn't want to be greedy. A 1 to 13 is good eating. All right, 1 to 13 is good eating. So here's the deal. I normally do a 1 to 10. But I seen that, okay, the actual supply zone imbalance inside of here is right where I have my TP. So I just left it there. All right. I normally do 1 to 10s. So, like I said, because when the market diverged and changed character, it didn't come back to the supply zone. It told me that it wants to be a retracement and it doesn't want to change trend. That's how I knew the buyers were still in control. All right. And I'll show you more. So here's the deal. Now that the market did what? Accumulated, reaccumulated, breaks an old high, leads to a new one. Now that this old high has been broken, who got to come into the market? Now that that old high has been broken and you see that bullish break of structure, who has to come into the market? Who has to come into the market? Now that the old high has been broken and a new high has been formed, who has to come into the market? Anybody? Absolutely, Torca, the sellers. So watch this. Bam. What do you have right here? Price landing upward on the candlesticks, price landing lower on the RSI. Divergence, change of character again. So here's the deal. This high led to this low. You can literally see what? The accumulation, reaccumulation, leading back to the supply zone, right? After the change of character, the market showed you that it wanted to change trend. So guess what? This accumulation, reaccumulation led back to the supply zone, then did what? Distribution, redistribution, broke the old low, right? Break a structure. It showed you that it wanted to change trend. So guess what? Now the market went bearish, right? So here's the deal. On the M15, redistribution, right? This whole entire thing is a redistribution, but like this whole entire thing is a redistribution. Okay. This whole entire thing is a redistribution. All right. Um, so here's the deal. After redistribution, you have a what? Accumulation. The market decided to do what? That yellow is on the M1 time frame, right? So the market decided to do this. Where are we at? Oh yeah, right here. So the market decided to do this. Here's your divergence, right? Market is slanting lower, market slanting upward on the RSI. That's your bullish divergence, right? You're not going. I went to the M1 time frame because you can't really see it on the RSI on the higher time frame. So guess what? Because why? Because the market broke past this redistribution, I knew right here this had to be a reaccumulation. Does that make sense? What up, LT? Hey, y'all, I went to school. I went to college with LT. So here's the deal. Because the sellers did not come in from this redistribution area right here, this engulfing candlestick, and it got violated, right? You can see how this is the imbalance of the redistribution. The sellers attempted to come in, right? Boom, had a reaction, but the bulls took back over of what? This imbalance. Broke this little structure, created this high, right? So now this redistribution market price cycle cannot make the market go down. So now what causes this to fail? What causes the redistribution supply zone to fail? A reaccumulation has to be printed. So guess what we did? Okay, we did this. Seeing that it would be a what? Reaccumulation, right? And when it comes to Elliott waves, you know that this is a B, C, D, E triangle. Okay. Same thing as a redistribution and reaccumulation. Okay. Because when it comes to Elliott waves, there are 4 different types of triangles. You have a running triangle, you have a contracting triangle, you have a descending and ascending. You see, contracting triangle, barrier triangle, contracting triangle, barrier triangle, running triangle, and a expanding triangle. Okay. So I knew A, B, C, D, E. Boom. Okay, bam, popped out of this. I knew we were looking for buys. So guess what? Right here, buy market execution, stop loss right here. This is a 10 pip stop loss on Bitcoin. And guess what? This one did a 1 to 22. 1 to 22 on Bitcoin. Y'all see it. Look, 22%. Look at it. I swung it. Now here's the deal. Inside of this 1 to 22, not only did I have one order on this trade, I had two orders. So another order was another buy market execution that I took is a little bit higher, right? It's a little bit higher than this. And that one did a 1 to 10. So you had one trade that did a 1 to 10 off this area. Then you had another trade that did a 1 to 22 with the same exact stop loss. Okay, the entry was just different, but the stop loss was the same. Okay, so this was a 2-on-1. This was that 2-for-1 special. You had one that was a 1 to 10, and then you had this one right here that's on the screen, a 1 to 22. They had the same exact TP. You see this gray line right here? You see this horizontal ray? This was my take partial, my 50% take partial area. So when the price hit that area, boom, I closed 50% of my volume. Stop loss went break even, and I let the rest ride. Let the rest ride. I eliminated the emotion. I had no reason to sit here and screen watch like this. I eliminated the emotion. My price hit, take profit 1, close 50% partials. Stop loss is now in profit. I cannot lose on the remaining volume. So there's no reason for me to screen watch like this anymore. Boom. Let the trade take care of itself. Boom. 22%. 22%. Easy. Easy. Okay. So that particular trade had a 1 to 10 and a 1 to 22. Okay. Now here's the deal. Next trade. Bam. Right here. 1 to 14 on Bitcoin. So right now, we already did what? 1 to 13. We did a 1 to 10, 1 to 22. Come up here, 1 to 14. Sold it. Okay. Yellow line. It was a take partial area. All right. So here's the deal. Market does what? Pushed up from here, broke this internal structure right here, and then what? This low led to what? The break of this structure, but it ultimately led to what? The break of this structure right here, right? So now an old high has been broken and a new high has been formed. Who has to come into the market? Yeah, you're going to have to rewatch it, LT. We had an hour and 58 minutes right now on this live stream. Hour and 58. I told y'all it'd be so valuable, and sometimes we just go past an hour. Be so much value. The market has broken an old high and led to a new one. Who got to come to the market? Who got to come into the market? If the market breaks an old high and creates a new one, who got to come into the market? Absolutely, Torka. Them bears, them bad news bears got to come into the market. So here's the deal. You see the market did what? It broke this structure right here. So now what am I waiting on? Here's the deal. Market pushed up, pushed down. This low right here attempted to push up again, but guess what? This accumulation, reaccumulation did not do what? It didn't clear this high. And guess what? The bears came in. Boom. Soon as it broke this low. Sell market execution. Stop loss right above the high. This was a 6 pip stop loss. A 6 pip stop loss on Bitcoin. And then boom. This right here was TP1 because it was an imbalance. Right? So then the market did what? The market actually hit that imbalance, retraced, right? You can see the accumulation. You can see the reaccumulation. Came back to this supply zone right here. And here gave you a what? Bam, engulfing candlestick. Distribution, redistribution, breaks the low, and does what? Ultimately, the what? 1 to 14. Makes sense? As soon as it hit this, close 50% partials, stop loss go right at break even, and let the rest ride. 1 to 14. Boom. I was about to say second. Fourth Fourth 10% trade. Okay? That's the fourth 10% trade. Now, guess what? Somebody that also just entered the chat, they told me, I do my best to not trade on Fridays. I say, why? What's the reason for that? Don't you know? Don't you know out of one of those 10% trades on Bitcoin, one of them was on New Year's Day? But you got people that's against trading on holidays, right? I don't trade on holidays. Man, the hell with that. If the market give a position and it show up, I'm taking a trade. Damn that. I'm going to just make sure is news going to be a factor or not. That's my thing. Is news going to be a factor or not? Okay? So, yeah, I trade on any day. I trade on every day. I trade during every session. Because here's the deal. Oh, yeah, Asia high liquidity, Asia low liquidity. Yeah, ICT. No, it's the market price cycles. All these Asia high liquidity, Asia low liquidity. I'm gonna tell you this: if the market only moved, you make trading fit you. Don't you fit trading? Yeah, the London session is the number one trading session of the day. Yeah, the New York session is the number two trading session of the day. But you can trade anytime from Sunday to Friday during any session. And don't be like, this is just trader preference. Oh, I don't trade USD CAD during the Asian session. Why? Why don't you trade? Oh, because it's not in session. If the market only moved or the market only printed setups for USD CAD during the New York session, trading would be absolutely too easy. If gold only printed setups during the New York session, trading would be absolutely 100% be too easy. All of that is trader preferenced. Asia high liquidity, Asian low liquidity, all that is trader preferenced. Oh, it took out the London high. Trader preferenced. Do you see anything about a damn London high, Asia low on my chart? No, we just doing market price cycles. We just doing market price cycles. We just moving along with what the market prints. That's it. It's no strategy. It's just how the market prints. Okay? So here's the deal. Boom. That's your 1 to 14. Now here's the deal. Gold is where we finished the week off with a 1 to 12. Right here. This was so beautiful. This right here was so beautiful. Oh my goodness. Look at this. So beautiful. So watch this. Look at this. M15 divergence, change of character. See how the candlesticks are slanting upward? And on the RSI, slanting lower, right? This area right here is the change of character. Why is it the change of character? Because it's the last area that did what? Accumulated, reaccumulated, broke this high, created a new one. Does that make sense? It's the very last area that went bullish. You understand that? Understand that? We'll go over this market price cycle and then we'll be done. And if you're not in my Telegram, my free trading community, free trading chat, you all are more than welcome to introduce other traders into this chat. Just don't tell them to be on that bull jump, on that bull jive. Is power positivity in that chat, and we personally self-develop. We keep it up here to high. We got high morale, high goals, none of that negativity. We ain't talking about no politics. I ain't saying nothing about Trump. I ain't saying nothing about Kamala, anything like that. We are strictly personally self-developing. We believe and have faith in God, and we read books and we trade. This like ain't no bashing nobody. Mm-mm. I'll kick you out. I haven't now since I've been running these chats. I haven't kicked anybody out, but and people, I don't understand why people delete the chat. They delete the chat. They leave. It's not. I'm showing up. I'm showing up. I got 100, almost 140 subscribers on YouTube, and almost 100 people in a Telegram chat. You think they're not getting value? I post stuff on social. Anything I post on Facebook goes to my Instagram and my Threads account. So they literally think I'm spamming, but it's all nothing but 1 to 10 trades, 1 to 10% or more trades. And then I post a trading community. I post the trading signals, Telegram chat. When I'm posting the image, I post the how many members I have in the trading community. I post my YouTube link, how many subscribers I got on the channel, all of that. And you know what people sit there and do? Look at it. Because they've been burnt by somebody in the past. They think Forex trading ain't real, whatever the case may be. I'm telling y'all. Okay. But here's the deal. Okay. The market diverged to change character, right? You see this redistribution right here. You see this unmitigated bearish engulfing candlestick. So this high led to this low. A redistribution and reaccumulation is not market structure. So the market literally does this. It goes from, if you're looking for market structure, the market goes from a accumulation low to a distribution high, and a distribution high to what? The accumulation low. So guess where I will put my arrow at next? Right here. And then I'll put my arrow next at the next what? Accumulation. Which is going to be down here. So check this out. This is what happened. Market, okay, the market changed character. I seen this redistribution on the M15 unmitigated. That's why it says what? 15-minute order block. OB is order block. So guess what? I went to the 5-minute time frame, and you can see how price did what? Diverged, changed character. All right? Changed character right here. So guess what? You can see the reaccumulation right here too. Right? You can see the reaccumulation. Look at this. Price slanting lower on the candlesticks, slanting upward on the RSI. That's a bullish divergence. Price right here changed character because this is the last lower high, right? So this is an accumulation, right? This is the reaccumulation. What does the market have to print next? What is the next market price cycle after a reaccumulation? What is the next market price cycle after a reaccumulation? What is the next market price cycle after a reaccumulation? Absolutely, Torka. A distribution. A distribution. So guess what? You see yellow, that means it's on my what? My M1 time frame, my 1-minute time frame. So here's the deal. Go down to the 1-minute time frame, and guess what? Guess what you see? Price slanting upward right here on the candlesticks, and price slanting what? Lower on the RSI. So guess what? What did I want to do? I'm looking for a sell. I absolutely 100% know I'm looking for a sell because I see that reaccumulation, right? But here's the deal. Price diverged. I have to let it change character. It has to prove to me that it wants to go bearish. You don't want to take the impulsive move. You don't want to take this first impulsive move before the change of character, because you don't know if after the change of character, the market wants to retrace. I'm almost done. You don't know if the market wants to retrace. All right. So now the market retraced, and right here at this wick right here, smacks this supply zone right here because it's unmitigated, because this is the distribution, redistribution, led to this low. The market accumulated, reaccumulated, came back to the supply zone, and then did what? Distributed, distribution, redistribution, breaks this low, and that's all she wrote. This right here, horizontal ray, where I took 50% partials, stop loss went to break even, and I let the rest ride to what? My overall TP, which was right here, this orange line on the 5-minute time frame, and that's how I did the 1 to 12. Okay. Any questions, problems, or concerns? I'm about to wrap it up. About to close. Any questions, problems, or concerns? All right. So here's the deal. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It's always greatly appreciated. I will never ever take it for granted. Have a safe, blessed, and productive rest of your super Saturday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many. Be the one. I use all time frames. All right. And Gloria, in the description below, download Telegram, and in the description below, you'll see 2 Telegram links: Trading Community, Trading Signals. Add yourself to the chat. It's free of charge. All right, y'all take care. Love y'all to life. I'm gonna put out the weekly schedule once I hop off the live. All right, y'all take care. We're gonna have a profitable week next week.